Normal bank interest earned here in South Africa is entered on the ITR 12 under code 4201. For taxpayers not yet 65, the first 23,800 of local interest earned is tax-free. For taxpayers 65 and older, the first 34,500 Rand is tax-free. It is likely that these exemption amounts will remain unchanged in future, as SARS announced a retirement savings plan investment product with tax-free interest. This tax-free interest retirement savings plan does not replace the old 4201 bank interest investment. In the budget speech of February 2015, the Minister of Finance announced the introduction of this tax-free interest investment product to help stimulate savings in South Africa. The investment product is marketed by banks and financial institutions. These new retirement savings plan products are designed to assist citizens in saving for their retirement by offering tax-free returns. The income screen in Wintax shows the taxpayer earned a salary of 600,000 Rand for the year and paid 153,156 in pay-as-you-earn on the salary. If we click on this button at the bottom of the screen, it will open a window where we can enter taxable and tax-free local interest earned. We've entered 24,000 Rand of code 4201 interest earned from an ordinary bank account such as a fixed deposit. Because our taxpayer is not yet 65, the first 23,800 Rand will be tax-free and only 200 Rand will be added to our income for tax. In this frame here, we can enter details of the new retirement savings plans with tax-free interest. In fact, we can use the Itemize button here to enter the details. You can see that we earned 900 Rand of tax-free interest from the 35,000 Rand we contributed to this retirement savings plan during the tax year. The program shows that the excess of 33,000 Rand contribution limit for the year will be taxed at 40% as per legislation. 40% of the 2,000 Rand excess contributions is 800 Rand, and this 800 Rand tax will be added to the tax due on normal taxable income in this year. If I drag the AutoSummary window over and show all the bottom line figures, we can see the 600,000 Rand salary plus the 200 Rand taxable portion of the ordinary bank interest makes 600,200 Rand income for tax. As we have no deductions, our taxable income is 600,200 Rand, and the tax tables show that the tax on our taxable income to be 166,869. Add the 800 Rand tax due on the excess contributions we made this year to the retirement savings plan, and we see a tax amount due of 167,669. Note that the interest we earned from the retirement savings account is tax-free and is not added to income. The 875 Rand shortfall on the taxes due is made up of the 800 Rand tax due on the excess contributions, plus the program has worked out that 75 Rand tax is due on the 200 Rand of code 4201 ordinary bank interest that exceeds 23,800 Rand. No capital gains tax implications, no dividends, just tax-free interest. It sounds great, but there is the fine print to consider. Contributions may not exceed 33,000 Rand in a year and no more than 500,000 Rand in a lifetime. Contributions exceeding these limits will be taxed at a straight 40%, and the tax will be recovered on your assessment. Now this is important. The interest is tax-free. The interest is not taxed at 40%. The amount of contributions made in this year that exceed 33,000 Rand will be taxed at 40%. You are free to withdraw your money virtually whenever you want, and withdrawals are tax-free. It is important that tax practitioners know the tax implications involved here. Perhaps the fact that you can easily make withdrawals may mean that the money in other retirement savings products could be preserved. Putting any money we may withdraw back into one of these new retirement savings plans could be a problem, as exceeding the 33,000 Rand contributions in a year means you will be taxed on the excess of 33,000 Rand at 40%. Don't see this as a bad thing. It is meant to convince you to keep your money in the investment. There's no such thing as a bad investment product out there. If there was a bad investment product out there, it would not last very long. Each different investment product in the marketplace is designed for a different type of investor living under a different set of circumstances. Naturally, this retirement savings plan product with its tax-free interest definitely has a place in many taxpayers' portfolios. Sure, it has its pros and cons, just like other products, each with their own different tax implications. Some of these retirement savings plans on offer may even have less ongoing fees or costs than a retirement fund, so the interest rates you receive should be pretty reasonable. Retirement plans like RAs, provident or pension funds may offer tax relief on contributions made when you make them, while the new retirement savings plan offers no tax relief on contributions made. The monthly benefits received from a retirement fund annuity are taxable, while any drawdown income received from one of these new retirement savings plans is completely tax-free. Having said all that, with tax thresholds as high as they are at the moment, there is little tax to be paid on modest annuity income anyway, unless it forms part of other income. If the invested capital is 1 million Rand and the drawdown income is around 5% of capital, then the income would be about 50,000 Rand a year, and the tax thresholds for taxpayers who are 65 and older is over 117,000 Rand anyway. Each case must be treated individually when choosing an investment product, and you may need to seek help from a reputable financial advisor. Nevertheless, it is important for the tax practitioners to know the tax implications relating to different investment products when asked for advice by taxpayers looking to invest. WinTax 2018 will use the new retirement fund tax laws to show you exactly what your maximum deductional claim allowed will be when investing in retirement funds.